with the recent drop in market, you now see a lot of people arguing that XRP is not going anywhere. It dropped back to where it started from, all those narrative. But what really is happening? That's something you need to look for. If you have seen yesterday's video, we talked about this possibility. We argued that the price should come back down, creating a narrative of head and shoulder, and then faking and moving back up. That usually is a trap, right? Those who go short at that point, they get trapped, and as the price moves up, they get liquidated and the price gets liquidity. Remember, we had our discussion about Ether. The price of Ether was high here around 3,600, and we argued that 3,250 is something I am looking at. The price dropped close to that level or just below that, which for me is a great sign. Now, when a lot of people are going negative near this range, we've been going positive. We've been buying into some of these assets, averaging down, doing a lot of different things in the market. Why? This is something you need to understand. If the market shows you there is a possibility like this, why wouldn't you take advantage of that? If the market is showing you this is the history, and most likely that recent past is going to play out, why wouldn't we use that? And that's one of the primary reasons why the SI family has been doubling down on a lot of different trades basically after the drop. Remember, at $73,000 Bitcoin, I told you guys, take 30, 40, 50% out as dry powder. On average, we did like 40%, and now we're injecting that back in during last couple of days because no one knows where the absolute bottom is. But this gives you an added advantage. Maybe the actual bottom was 42%, but you bought it at 35. That's okay. You still managed to get cheaper price, and that's how you make it in this market. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. When we discussed about these moves, a lot of people were like, this guy doesn't know what he's talking about. But now it was serious. These whales, they don't make it easy. They don't want you to make the money easily. So that's why I was saying don't get trapped. That was the primary reason I said, your worst dream can be coming true, or these guys are working on it, was primarily based on these kind of narrative. Because at that point, panic sets in. At that point, you really don't know how low it's going to go, but you have an idea of what's happening, right? Now, if you break into this on a daily chart, it's a little bit hard to understand. Okay, there was a lot of selling pressure and the price increased. Fine, we agree on that. But now when you start to break things down, okay, what happened in the first half of that candle versus what happened in the next half of that candle, which was at the support. This is important to know. So the next half shows you it got a lot more selling volume, but instead of price going down with a long wick and then bulls coming in, the price actually went up. It went all the way up to $66,000 and then came back down and closed at $62,900. So that means even though there was a candle which was completely dominated by the sellers in terms of volume, buyers tried to push that up. So the buying interest in the market is coming back. So who the hell is buying? That's a big question, right? The market dropped. Who's buying? Who's trying to reverse? Who's trying to take all these supply in? Because the argument of there is no supply is kind of being shaken now. Whatever comes into the market, these guys are trying to acquire that. But still you see some of these happening. People coming out, dropping big amounts and shaking the market. Now this is what creates panic. And that's one of the reasons why we saw this deep correction. Now you are on a weekly chart, and what you're watching here would be a panic kind of a thing, where the market is showing you, saying the argument, whoa, if the price action is about to close like this, it wouldn't look cool. It definitely wouldn't look good. Why? If you break things down, again, on a 3-day chart, we already put the argument that, guys, if this is the negative divergence which you're watching, it wouldn't look healthy. Remember, we put that argument in at the right time. Now, Last time we got something similar was near this point, right? At that point, the initial drop was very minor and you had an immediate retest. So that was like a 14% drop and the price went back up. Fine. Now, what are we watching here? 15% drop. I mean, it does look small, but when we do the comparison, it's like almost close. I'm like, okay, if that's true, watch what's going to happen here. If this trend line acts as a support, I mean, which trend line, right? That's the question. This trend line acts as a support in terms of strength and you get a bounce before you break this back down, expect the price to do something similar. Now, something similar means what, right? There would be still arguments put on with different guys at the different horizon, at the different countries for sure, about $200,000 Bitcoin, $500,000 Bitcoin, or $1 million. But before you actually digest that incompletely, you would like to look at what the reality was. So this was that range which we were speaking about in the market. So how much did the market drop? So relatively speaking, that dropped like 14%. We kind of dropped 15% this time. Great. After that local bottom, how much did the price go up? Or to look at it another way, how high did it go to make a new high? That was close to 3% from the high to the new high, or 20% from the local bottom. So if you want to put that into perspective and you come into the current market and you're looking at this, okay, the price dropped like 61 something. So you plot that 20% from there and you're struggling to make a new high at that point. It's almost just a minor local high. You're just breaching the previous high. Now, if you want to put the perspective in as, okay, 3% above the last high, that's also fine. It's conservative too, but that's 76. So the range from 74 to 76, it's going to be vital. Now, on a daily chart, when you plot your trend line, you happen to see something. What's that? The price is kind of respecting a trend line. It's getting some buying power there. Now, we don't know whether it's going to hold or not. But if history and what we can learn from history is right, most likely it's literally going to kick a lot of people out. A lot of levered shorts are going to be active now. These guys really would like to kick them out because they make money from that. And that's one of the reasons why I was thinking about it like this. Okay, on a shorter horizon, when you do zoom in, you got that narrative like they would like to push the price up a little bit and then trap us in. This is what was happening from some time. Like the price goes above, they trap us in, they push it down, and then they ride that back to the upside after breaking the confidence of the retail. This is what these whales were doing for at least last 14, 15 months. So we're getting a taste of what these guys are kind of planning or executing. But when you buy close to the trend line, you make a decent ride. You get a decent ride, which is fine. So in XRP terms, what this means is like, next few weeks, what you're looking at is just a reversal. The first key point of $1.20 is what you are still eyeing at. This is your range of breakout and retest. You're still at that point. So those who are arguing that this asset is the worst asset in the world and it's about to drop back to point 2 need to look at this. And then ask the question like, okay, are we watching that support breaking back down? So you have the micro trend line, which is this one here, and you have the short-term trend line, which is this one. Both of them are right now acting as a support. That's a positive mark in the actual XRP markets right now. Then you look at Ether. Okay, we dropped a big leg. Agreed. But what's the average drop in this asset when it actually do these volatile movements? Okay, here you get somewhat like 22%. Here you get somewhat like 22, 23. Okay, if we get the absolute, maybe, yeah, 23%. And this leg down here was what? 20%. So you kind of get an average of 20, 21% move in the market. How much have we done till this point? I'm happy with that. I mean, if I'm buying this asset and waiting to buy this asset after the dip, you're utilizing that. And that's what the market gives you the opportunity. Close to the top here, we told take 30-40% dry powder out and use it as the market goes down. At a major support level, for sure, this one wasn't, then the next support level here. So instead of buying at 4,000, you could have literally bought at 3,500 below or close to 3,000. This is the advantage of looking at the recent past and trying to factor that in. So one of the primary thing for the Bitcoin dominance here is that we need a consolidation here. We don't need a breakout directly to the upside. Most likely what's going to happen is this looks like a continuation pattern. It comes back down to the bottom and then goes back up. So during that phase, you would see what the altcoins are trying to promise us. Okay, that micro dip in the market would actually give you this move up. Then a retest back would give you this. Agreed. Then a consolidation before your breakout or just after the breakout gives you this leg. Market is showing signs. So it's on us to try and break things down and make sure like we kind of understand what it is showing. If not to 100%, you're looking at different things. Say this is Bitcoin on a 401. What are you looking at? This is now your trend line. You're slowing down at a trend line, which is good. Now, on the micro leg, which is here, it's dropping and this is going up. On a short-term level, this is going down and this is not going down. So the divergence is starting to come in, the bullish side of things, right? And a lot of altcoins are starting to show you that exact same sign. If you look at the price action before, each time when the price was going up, you have these kind of narratives set in. Like the price to the RSI was showing you something, hidden bullish divergence. You didn't break that to the downside. Yes, you consolidated there. And what was the time taken for those consolidations? It was like 11 days, right? So it was whether it's that correction or if it is this consolidation here, it's all close to that 11 days mark. Now, how long did we come through this right to the downside? As of now, it's like 8 days. So to put that same average here, you're looking for like 11 days, another 3 days, somewhat like in this range. Now, if it starts to bounce back up, will remain in this range of 65, 66, it's good. It shows that the price action right now, at that moment, if that's playing out, is respecting this range as a support. And you're bouncing back. Next level is this, 65. So if you're above that, you're now in the mid-range. This range is going to attract a lot more supply and demand because if we break higher, that should bring a lot more demand. If you get rejected, that should bring a lot more supply, people starting to sell. So this is what you're looking at. On a macro, say you're a perma bull on this asset. You're like, okay, fiat is not good. I'm going to be in this asset. If that's you, then you're looking at this trend line as we spoke last time. You're not buying at this range. You're waiting because you know that the price is going to come back down somewhat like this. At that point is where you're buying because you're literally like a spot rider. You buy that asset on spot. You're not levered. You're looking at a weekly to monthly chart. You're looking at a higher horizon. So you bought in here or here. And the price slows down here. You're not buying there. You're literally waiting for it to come to one of the main supports. And that's where you buy, right? So the next key range for you as a long-term investor in this is like coming back down to close to 50. But on a short-term narrative, if you do look at this, when you are someone interested in the price action, you would put the argument, the 1, the 2, the 3. Okay, cool, great. Now, if you do look at the price action, you will have to put the argument like the 1, the 2, the 3. So what are you looking at? Last time after the 3, which was here, you had this, right? What if we do that and then go forward? Like this is what I'm looking at. I believe there is going to be some bad season coming in, and the way the market is moving, it feels like we'll need to adapt to that. Maybe it's going to be very quick here with the next 30 days. And then we ride back down for another 2-3 weeks. Let's actually put this into numbers. So once that top was formed, it was like 2 months where it went down. So if the market is going to that direction, now the question is during that time, so 2023, April, May, June, 3 months. what was the altcoins doing. So if you take Ether for that matter and look at Ether on the same horizon, it kind of gives you some clue. So you're looking at April, March, late March, April, May, June. Yeah, it was actually going up. You can actually see this trend. So Ether did move up, it made a trap, and then it followed through on 2 drops. So that's exactly what I'm talking about. So when it actually comes back down during that time, you will see some capitulation, but initially you see the alt market riding higher. Now that was inside the accumulation range and you still managed to do like a 50% move. So here you are on the ride up, the markup phase, and here you may do 100% move, right? So depending on which asset you're riding, if you're on a small cap, yeah, you have a lot of upside. That comes with heavy risk. If you're on large caps, the blue chips, yes, you're not looking for 300% move. Maybe it's a 70, 80 or 100% max. This is what you're looking at. But you need to know that you're not in a 10, 20, 30x leverage. Now, yeah, if you are the luckiest human being who got the absolute bottom here, great for you. But most likely, most of us are not. That's one of the reasons why we say control your emotions, look for the market to give you right answers. If this is a trend line, you literally have to sit on that trend line and wait. 1 hour chart was already showing you multiple divergence. But what was happening? All of those were getting invalidated at the local top. So at that point, it's like, okay, unless you're micro trading, it's not useful for you. Let me zoom out. You go on a 2 hour chart. That was also showing you the divergence, which was not useful because it got neglected. Now you zoom out, you go on a higher time frame. You go on a 4 hour chart. It did not show you a divergence here. It's showing you that first time here. So I'm like, okay, I'm fine. It didn't get invalidated till this point. So most likely you're going to see that 66,000 mark soon. And if you do break this one, okay, now it's open. The room is open all the way up towards 73. Now, your measured moves will come in picture. That's an 8% ride after the break here. So you plot that and you get close to 71, 72. So factor that in, 66 is going to be one resistance. Then close to 72, it's going to be another resistance, after which you will see the 74, 75 range. So in between, the more Bitcoin consolidates after a run up, the higher the altcoin will run or the dominance will drop. Use this again for your advantage. Just like what we talked about in yesterday's video and today it's the reality. Use that for your advantage. And if you want to join the SI family to get all these updates at the right time, join the 1,000+ members. Use it for your advantage in this bull season. Use the anti-move in the trend. The macro trend gives you opportunity when the micro trend goes against the macro trend. Once you understand that logic, the market is in your hands. You need patience, you need discipline, there is no other way. When the price drops 30, 40%, if you're getting pissed, crypto is not for you. If you consider that as an opportunity, you literally drill back in or dollar cost average or add margin, stay, hold on. If you don't do that, the market is going to kick you. The market is not for retail. The whales are playing this game and you need to understand and you need to start thinking like what the whales would be doing here. When stocks go down, this is the same story. A lot of people start shorting, whales push it back up. They kick them out and then drop it. This is one of the primary reasons why you see one big dip or capitulation before the price starts going back up. They kick out the retail. If you look at this point or this point, you'll see almost the same thing happening. And I think that's repeating. So guys, if you received value, smash that like button for me. I'll meet you guys on the next video. Bye for now.